In more detail, let's get Hitesh Eidnani, who's from Trend Tech Consultants. Hitesh, how does one look at the markets right now? This is the third consecutive session that you got somewhat of a cut coming in. Is the sentiment now getting a little more cautious?
Priyanka, I think we are more range bound now. 6080 was a very important level which we took up on the upside. Nifty went up all the way to 6200 and it's come back again to test that level. So I feel that although we are in a broader range, but the bias is on the upside. If you look at the Nifty on a daily, weekly or a monthly chart, overall everything is pointing upwards. Globally the picture is good as well. So it's quite very common for the Nifty to cool down for 2-3 days after an up move and then once again resume its upward direction. So my sense is that we should start moving upwards in a couple of days from now. But the 6080 is an important level, and if we close above 6080, I would be more comfortable with that.
Okay, 6080 is a level to watch on the Nifty out there. But Hitesh, what about some of these sectoral plays? I'll start off with metals first. Sterlite Industries down nearly 4%. How is the entire metal pack looking as of right now?
Overall, among all the sectors that are looking bullish now, metals is definitely out there. Metals is very bullish. We are very bullish on Hindalco, Tata Steel. So overall metals as a pack is definitely very bullish. And if you were to look at Sterlite Industries as such, let me just pull up the charts for Sterlite. It is looking good. I mean, we should see a breakout from these levels. I would wait for another 3 to 4% up move before initiating any fresh longs in Sterlite. But overall, the metal space is looking very positive right now.
It's a positive call coming on the on the metal space out there, but we're going to be focusing on the auto space because remember, Bajaj Auto is one stock which has fallen considerably over the last couple of sessions or so. That stock's down 3.1% today also, and in this week itself, stock is down nearly 12%. There you have it. 1 week, stock's been thrashed out of shape by nearly 10%, and majority of the falls actually come in after its sales numbers for the month of December were announced. The stocks, Bajaj Auto is being thrashed out of shape. What are the charts actually telling you on this counter?
That's right. We got an exit in Bajaj Auto sometime in early part of November, and we haven't got any fresh long in Bajaj Auto. I would wait for it to go above 1550 before finding that the chart has turned bullish again and initiating any fresh longs in Bajaj Auto. In the auto sector, Tata Motors continues to remain good. As long as it trades above 1240, 1250, we continue to remain invested in Tata Motors, and hopefully we should reach our target of 1500 in Tata Motors in the next couple of months. In the auto sector, currently we are long on M&M as well. M&M is looking extremely bullish, and as long as we don't go below 750, which is our stop loss on M&M, hopefully we should see another 15 to 20% uptick from here in M&M in the next 3 to 6 months. So clearly Bajaj Auto is one counter which is looking bearish currently, but Tata Motors and M&M are two counters which investors can continue to remain long in.
You know, the other moves that's actually catching the eye today is Ambuja Cement. That stock is down nearly 4.2%, and after some time that you've seen such a sharp cut come onto Ambuja Cement, what's the call coming on the entire cement space and also Ambuja and ACC in that space itself?
See, ACC is something that we initiated along in at around 1030, and we remain invested in ACC. Gujarat Ambuja is a bit choppy currently, and we would wait for it to go above 150 before initiating any long in it. So let the market give a direction on Ambuja Cement, but currently it's in a sideways kind of a territory where we need to see some further direction. So till we cross 150, we are not taking any call on Ambuja Cements.
Okay, fair enough. What about the oil and gas segment? Because you've got some smart moves come out, Reliance Industries last couple of sessions or so. That stock's made some good moves. Apart from that, anything that's looking attractive from the OMC space?
Reliance, we are, like I mentioned on the show last week, we are waiting for a breakout in Reliance. We are currently long, and hopefully this time we should cross above 1150, and that would make the entire market euphoric. But the overall oil and gas sector has not performed in the last leg of the bull rally, and who knows, it could be the leader in this or the next leg of the bull rally. But till we see some positive signs in that, we are not initiating any fresh longs in the oil and gas sector. Currently, nothing is looking really attractive, and we need to see some positive trend before initiating any fresh trades out there.
The other sector which is actually showing some kind of strength in the last few sessions again has been the IT pack. You got TCS, you got Infosys, HCL Technologies. All these stocks are showing some kind of upward momentum in this week itself. And because looking at the way markets have actually shaped up, and you really haven't got more of an up move, you've still got IT actually holding out in this kind of a market. So what's the call coming on the IT, primarily on the large cap side?
IT pack is definitely the strongest sector in the current market. You have the leaders running away, Infosys, TCS, HCL Tech, Wipro, and the mid caps have also started showing a considerable amount of movement. So IT could be the next big mover in 2011. Our advice is to remain invested in IT. We could see levels possibly never reached before. Globally, if you see, Nasdaq is also very bullish currently. So IT is one sector that we need to definitely remain invested in, and those who have missed the rally so far could jump in at current levels also, because IT could be what banking and auto was in 2010.
Okay, Hitesh, now hold that thought, because we've already discussed the auto pack in names about CLSA's views on Bajaj, or discussing the auto pack. What about the FMCG pack? Because HUL is almost trading near its life high levels as of right now itself. You got 329.9 is the life high on the HUL. It's corrected a little bit today, but yesterday was trading around about 325, 326 odd levels. How does one read into the FMCG space, and specifically HUL and ITC?
Priyank, as a quantitative trader, when we see any stock trading at a lifetime high, that's a screaming buy for us, because there's obviously some reason why it's reached out there. It's on a very high momentum. Now, if you look at HUL particularly, it's been in this long trading range for the last 8-10 years, and since it's now broken out above that range, it's at a lifetime high. It's an extremely excellent opportunity to get into this stock now. We are expecting very huge gains in HUL in the coming 6 months, 12 months, maybe the next 1.5 to 2 years as well. We could see HUL reaching levels which are unanticipated. So HUL is definitely a very screaming buy in the current scenario. Overall, if you see the FMCG sector as such, it is very good right now. Other than IT, pharma, FMCG is on an uptick right now. If you see ITC, if you compare it with HLL, ITC has given a huge amount of move in the last 1 to 1.5 years, but the uptrend continues. So ITC is another counter which we could enter at current levels, keep a stop loss at around 165 and look for a 25 to 30% gain in the next 6 to 9 months. Other counters in the FMCG pack which are looking good is Gillette, and if you look at Marico as well, that is also on an extremely good uptrend which started in 2001. So that's a counter also which we could enter right now.
Okay, there's also kind of view coming on FMCG space in terms of technicals out there. But Hitesh, talk about some of these mid-cap infra companies. How is that actually coming across right now? What's the view coming on some of the infra stocks? Because on and off, you've seen IVRCL, you've seen NCC. All these show some kind of a momentum. I'm talking about the mid-cap space. How is that actually panning out on the charts?
Priyanka, infra is one sector which hasn't performed in 2009, 2010, and there is nothing on the charts which is saying that it would perform right now. I mean, it could possibly be an outperformer in 2011, but there is nothing on the charts currently which says that, okay, go ahead, initiate longs in infra. So we are still totally out of the infra space, and we would wait for some confirmation on the chart before initiating any positions in infra.
Okay, so it's a wait call coming on infra out there from Hitesh. But we're going to be slipping into a short break. Tell us about some of your top mid-cap picks right now, because when you look at the mid-cap space itself, it's gotten a little active over the last few sessions also. Anything that's looking attractive in the mid-cap and small-cap segment right now?
In the sugar space, we continue to remain bullish on Renuka Sugars with a target of 110 to 115. In the pharma healthcare space, we've got a buy on Piramal Healthcare, which is currently at around 485 with a target of 505 and a stop loss of 472. We also are bullish on Lupin, currently trading at 490. We have a target of 510 with a stop loss of 476. And we've also got a buy on Patni Computers with a stop loss of around 450 and a target of 535.
Okay, Hitesh, so that's kind of some of the topics that we're getting from Hitesh out there. Thanks for all those details, Hitesh, for giving us some topics as well as discussing the sector as well as